I'm Connor Bays with Commonwealth, and in this video, we're going to highlight the smart investing approach built into the Commonwealth platform with BlackRock's LifePath target date funds. Smart investing is one important piece of what drives a great workplace retirement plan and a key part of the Commonwealth platform. Investing is one of the key value drivers that creates value for plan members and employers, along with things like retirement planning, low fees for life, easy digital setup and administration, as well as dedicated expert service, education, and support. Investing successfully for retirement comes down to getting three things right. Number one is diversify, or having a broad mix of investment types across geographies, industries, and asset classes in your portfolio. Diversification accounts for the fact that one kind of investment can have a down year while another may have an up year. Said differently, diversification is just another word for don't put all your eggs in one basket. The second key thing is staying the course. The evidence is clear that attempting to time the market and trying to guess when to buy or sell results in underperformance compared to staying the course and sticking to your plan regardless of what's happening in the markets this day, this month, or this year. The third key thing is about managing risk. When we're young, we have years ahead of us so we can take more risk as we weather the typical ups and downs of the markets. But as we get older and we can actually imagine ourselves reaching retirement, we typically want to start thinking about reining in the risk in our portfolio to help protect our savings. Commonwealth has partnered with BlackRock to provide an investment approach that helps you follow these three key principles in your portfolio. BlackRock is the world's largest asset manager and a market leader in the Canadian retirement landscape with over $30 billion in their LifePath funds in Canada. BlackRock pioneered the Target Date Fund, broadly recognized as an effective retirement strategy. We'll explain more in a moment what a Target Date Fund is and how it works. When enrolling in their Commonwealth plan, participants have the flexibility to pick from a set of 9 different BlackRock LifePath portfolios. While there is significant flexibility in what participants can choose, the platform will also display a suggested default fund. This recommendation is based on their current age and target retirement age. For example, a 40-year-old employee planning to retire at age 65 will be recommended the 2040 LifePath fund. This fund is optimized to provide the right mix of growth and risk management to provide stable income for an individual reaching retirement around that time. Participants are always free to change or modify their fund if at a later time they want to take a more conservative or aggressive approach. Let's take a look at what's happening inside each BlackRock portfolio. Firstly, each fund is highly diversified, comprising over 10,000 underlying investments across the 3 broad categories of stocks, bonds, and real estate and infrastructure. Having this mixture of investments is important as each plays a different role in your portfolio. Stock investments, for example, are aimed at maximizing growth, while bonds provide stability. Real estate and infrastructure provide both growth and protection against inflation and other risks. To construct each target date portfolio, BlackRock uses index-based exchange-traded funds, or ETFs. Index-based ETFs are a highly cost-effective and transparent way to give your portfolio exposure to a wide range of investments. For example, to ensure your portfolio has exposure to Canadian stocks, your BlackRock fund invests a portion of your assets in the iShares Core S&P and TSX Composite Index ETF. This underlying ETF invests in large companies tracked in the S&P and TSX indexes. Across stocks, bonds, and real estate and infrastructure, BlackRock invests participants' assets in one or more equivalent index-based ETFs. In addition to providing cost-effective diversification, BlackRock target date funds help participants automatically manage risk. Investing generally involves a trade-off of growth and risk. For example, investments in stocks tend to provide strong long-run returns, but are subject to bigger ups and downs. By comparison, investments in bonds historically provide more modest returns, but tend to be more stable. The right balance of growth versus risk depends on what stage you are at in your life and your retirement goals. For a younger person, the priority is growth. An individual early in their career can focus on the long term and worry less about the ups and downs of the market. Concretely, this means having a greater share of stock investments in their portfolio. For an older person approaching retirement, the situation looks very different. An older individual will need to start cashing out their funds in the nearer term, making stability and safety a greater priority. This means having a higher proportion of bond investments. BlackRock's LifePath target date funds on the Commonwealth platform are designed to strike the right balance of growth and safety in your portfolio at every life stage. For example, as shown here, the default portfolio for younger members will have a higher share of stocks, almost 90% for this 25-year-old being recommended the 2060 retirement fund. As time passes, this fund will automatically and gradually rebalance towards more stable bond investments. As you can see here, By age 60 or 65 entering retirement, that mixture of bonds versus stocks will rise to 60%, adding that component of safety and stability to the portfolio. This rebalancing is managed automatically by BlackRock inside each fund, so participants do not have to adjust or modify their portfolio. Target date funds, like those offered on the Commonwealth platform with BlackRock, are increasingly the gold standard for retirement plans in Canada and globally. The increasing popularity of this approach is in line with empirical evidence, regulatory guidance, and market trends. A recent study from the Wharton School found that investing in target date funds could lead to up to 50% more retirement wealth over 30 years. On the regulatory front, a recent report from Canada's Financial Standards Regulatory Authority and the Office of the Superintendent of Financial Institutions, two of the most important bodies regulating group retirement plans, highlighted target date funds as an appropriate and desirable approach for plan members. Looking at retirement plans across Canada, fully 80% of group RRSPs and DC pension plans, known collectively as capital accumulation plans, include target date fund options. Increasingly, Canadians want to know that their investments are managed sustainably and responsibly. BlackRock's extensive research has shown that companies that perform well in environmental, social, governance categories, or ESG, also perform comparatively better in the market, especially in a down market. With that insight, BlackRock's LifePath target date funds work to integrate sustainability insights directly into the investment portfolios. Applying these insights within the LifePath target date funds happens in 4 ways within the equity building blocks of the funds. Firstly, a screen is applied to exclude investments in industries like tobacco, civilian firearms, thermal coal, as well as companies with no ESG rating. BlackRock's index partner, MSCI, scores each holding on environmental, social, and governance metrics. Investments are tilted away from low-scoring firms and towards companies that score higher on these measures. Finally, as the world's largest asset manager, BlackRock is able to use its scale and ownership stake in many of the world's leading companies to push firms on issues such as achieving net zero climate targets. In summary, Commonwealth offers made-for-retirement target date portfolios provided by BlackRock, the world's leading investment manager. These funds provide diversified investments while helping participants balance between growth and protecting against risk. This is a leading investment approach in group retirement plans, and evidence shows is likely to result in more retirement wealth for members. To learn more about the BlackRock investments in the Commonwealth plan, visit commonwealthretirement.com.